Hello, welcome back to another episode of my Garage Podcast. In today's episode, I'm going to be talking about things that have been going on during the week, kind of some personal stuff too. As I'm recording this on Friday, May 22nd, I went to Santa Barbara today. Um, it was pretty cool. I wrote down how I feel about it before I went, and after I finish talking about that, I'm going to talk about how it was after I went. Uh, so, but Uh, Now I'm going to talk about when I was writing how I felt on on Tuesday when I was writing this, and just kind of my ideas about it. I was just saying, I think it's crazy to think that in 2 or 3 weeks, if you count finals, it would be two. If you don't count finals, it would be 2 weeks. It will be my last time going to the Santa Monica College campus. Um, I might do some classes this summer, but if I decide to go to San Luis Obispo, so it won't be my last time being a part of SMC, but I hope you get the idea where I just won't be at the campus. Um, in the beginning, I really did not like SMC because I felt like I failed, but now looking back at it, I regret not taking full advantage of all the opportunities that were offered to me. But I will take what I learned from SMC and the failures that I had and try my hardest not to recreate the same mistakes that I did and face whatever scares me, because I now know the things that I don't want to do build up to the things that I want to do and help me get to the goals that I want to. Um, I feel like that was a lot, but all jokes aside, I feel like I went through a lot and learned from SMC, but because I wasn't a part of the scholars program, I will say there are far too few counselors for the number of students that attend SMC. I remember waiting a couple of weeks ago for almost 4 hours one day just to meet a counselor. I will say, granted, it was during a time when students were registering for classes in the spring, in the spring and the summer, but I find that crazy how I just had to wait 4 hours and um, I couldn't just um, and also how I couldn't just book appointments for January counseling was annoying. But now that I'm a part of the Center for Students with Disabilities, I could call at 8 and make a same day appointment. So that wasn't too bad. But the period where I had to um, wait hours in line to meet with the counselor was really annoying. And then whatever question I had or whatever I needed to find out, it just like built up anxiety in me, and it was just kind of nerve wracking. But excuse the tangent. But now getting back to going to Santa Barbara, it's scary. But I know that I'll be able to make the best of my years, um, and no matter what school I'll be going to, it's going to go good. And now that I actually got back from Santa Barbara, I like to. I will say that Santa Barbara is a nice campus. Um, it still didn't make my answers clear for me. I will also say that I was kind of grumpy because I had to wake up at like 6 and then drive like 2 hours there. I tried to sleep as much as I could, but it was still annoying. And then there's some things going on in my life where it's just like I don't. I was just annoyed the whole time, um, and I felt like that was kind of clouding my judgment. And but now that I'm back, I would say that it was pretty cool to go. Um, the campus is nice. I like how it's near the beach. I really it was growing up. I really liked being near the beach and going to the beach. Um, so that's cool. Um, and overall, I did like the experience of going there. Um, so it kind of makes I thought it would make my choice clearer, but now it makes it harder. And so now in this next week, honestly, I have to really decide and make a decision. And I will keep you guys updated. But I will excuse the tangent. And now I'm going to Um, Now I'm gonna go back to talking about the economy and just kind of what's been happening during this week. When I was writing this on Wednesday, Nvidia was set to reveal their earnings report. Personally, at the time, I was feeling hopeful, and now that I know later, which I'll talk about how Nvidia performed in their earnings report. But personally, I was expecting Nvidia to have a good earnings report with how much AI has taken off, and their meeting in China, trying to expand their markets. I feel like will go over well with the board and revenue and just decisions to propel the company forward. On the other hand, Nvidia stock has lost 1.82% in the past 5 days, and this may be in anticipation of the earnings reports where investors are using strategies to make the best of the situation, whether it is good or bad. Also, before I get into the next topic, I want to explain some of my terms for myself and you, or the viewer. I have talked about yields, but never really officially defined them, nor was I able to give a definition in a definite definition, but in the context of what I was reading, I was able to know what I was reading and what it meant, but I wasn't able to give it like an official definition. And the official definition that I was able to come to terms with or understand is yields mean to supply or to produce something such as a profit, an amount of food or information, and this is from Cambridge Dictionary. And this means how much income an investment generates. It usually refers to how much interest a stock or bond occurs and is usually written as a percentage. Also, what is a bond? It is basically a loan that an investor gives to a corporation, government, or municipality. Sorry if I'm butchering that. But for both parties, the receiver gets money, and the lender who is giving the loan out, or the bond, who's buying the bond, will get interest on the bond. Instead of a stock where you can sell at any time, bonds work so that before the borrower gets the money, both parties agree on how long the money will be borrowed for and the interest rate that through the years that those bonds are set, how much interest will occur on them. And as well, the borrower agrees to pay interest regularly for a set amount of time. Um, and an example that I will give, just because it is really simple, um, say you get a bond for $1,000 and you have a 5% interest rate on it for 20 years, and you will be entitled to $50 every year. And that's basically the gist of a bond. Just getting, you give an initial investment, you get interest on that investment, and then you get paid yearly the interest, and then at the end of your loan or end of your bond, you get paid that money back. And but if interest rates are set, example for 7% and your bond is at 5%, and that's set before, you will actually be losing money on that bond because the interest rate that the Fed sets is more than the when the Fed sets an interest rate that is more than the interest that you have on your bond, you just lose money because of this. And so you would want an interest rate that is smaller than the set interest rate that you have, and you could actually make money on that investment you made if the interest rate on that bond is higher than the national interest rate. And say that you have a 20-year bond, there can be years where you actually lose money and years where you actually make money. So that's what makes bonds kind of that's kind of a risk about bonds. And government bonds don't usually yield a lot of money and are less risky, but corporate bonds are generally more risky but give a higher yield. And the reason for this is the riskiest thing about corporate bonds is that a business may go bankrupt and they are unable to pay you back for your bond. But what makes them less risky is where you stand when they're distributing assets after a company goes bankrupt. First, bank lenders get first stake over bondholders, but bondholders go before stockholders. And this is one of the reasons why bonds are generally less risky than stocks. Because when companies go bankrupt, they have to pay back everybody, and and so they're not in debt to anybody. Also, a side note, if a company goes bankrupt, board members and top management, that might not be the right word, but basically the people at the top, they have to band together to pay back all the debt they incurred and pay back everyone else or everybody that has invested and put money into the company. And that's why one of the reasons why owning a business is so risky, because I remember reading this statistic where like a large percentage of companies failed within the first 5 years, and when you fail, you still have to pay back people. And I'm pretty sure when it comes to bankruptcy, um, okay, let me fix this because I feel like I'm like so close. But when it comes to bankruptcy, I am pretty sure that you just don't have to pay taxes on it, or I just that's one of the parts when it comes to um, when you file bankruptcy, you just don't have to pay taxes on what you owe and when you're selling things back. So you're somewhat protected. And also because I usually like to talk about bubbles and how I like to say there's an AI bubble. The dot com bubble was 7 years long until the crash in 2000. And if comparing timelines, we are still in the beginning of the AI bubble, where most of these companies are um, most of these companies are newer and investors see it as a new opportunity. And that's basically what happened within the dot com bubble. Computers were becoming more mainstream, more consumers were able to get access to computers through making microchips smaller and making it computer I just said making the materials that computers are made out of, like plastic and all these other things, all collaborated to make computers cheaper for the average consumer. And once people people saw that this was becoming a new form of um, retail and commerce, people started to start up businesses like with Jeff Bezos and Amazon and Facebook and all these other companies that started around that era. Um, they were making so much money, and investors saw that, and they didn't have a full understanding of what was going on and just saw it as this new hot thing that so many people were using. And I just want to say, maybe maybe this is not the right word to say, but they got blinded by greed and just invested in anything, and it just led to a big financial crisis that that really messed with the stock market. And also, why I was getting to talking about these terms like yields and bonds is because the US 30-year Treasury bond has hit the highest yield since 2007 on the eve of the financial crisis. And as we're still going, there still hasn't been a financial crisis just yet, but it looks, with the amount of spending and energy prices rising, it's really hard to not say that things are not going to get worse before they get better. Um, but not only has the US been affected by a bond sell off, but so has Europe and Japan. Investors are scared currently right now because they aren't gaining interest and won't have a good return on their investments or their bonds because they expect that interest rates will rise due to the factors such as the Iran war, energy prices, eh, or the rising in energy prices, and how the Iran war is currently affecting everything in the world, and also spending that has been increased in the United States. And investors are expecting by the end of the year, the Federal Reserve will increase the inflation rate. And with a rising deficit, and a deficit means when expenses surpass income or liabilities, and the accounting equation is assets equals liabilities plus equity. And so right now what's happening is liabilities is greater than the assets, and that's really what you don't want to happen. And um they're measuring the gap between money spent and money received. And right now, investors want to make sure they aren't getting screwed over, so they're going to be selling these bonds to make sure that uh, they won't completely be screwed over. And with that higher yield, it threatens the U.S. economy, which has been strong, and a high yield increases borrowing costs for homeowners and corporations. And that's why no matter the outcome of the U.S. war, I feel like the U.S. already lost. Even if they're able to um, get these nuclear weapons that Iran has, which has been said since Bush was president that Iran, Iraq, and Afghanistan had nuclear weapons, but it's been constantly disproven. And it's more of a reason for financial gain to be able to go in these countries and make sure that they do not nationalize and privatize their oil and let the U.S. investors and European investors come in and be able to exploit and take advantage of the situation. And people are starting to already anticipate interest rates are rising, will rise, and this makes jobs harder. The job harder for Kevin Walsh because, or Warsh, sorry, I always think it's Walsh, but it's Warsh, because the president expects him to lower interest rates while he makes decisions such as involving the U.S. in the Iran war. And it just makes his Warsh's job so much harder. And this may not be solely because of energy prices or high energy prices to say the least, but something that's been building up to this very moment. Investors have been very nervous when it comes to the current state of the economy. Somewhat relatively short 10-year bonds have also hit a higher yield than average, with it now being point or 10 basis points higher, which is point 10 now, and it sits at 4.69%. And what makes this unusual is it's not been this high for over a year. And traders right now have shifted perspective, believing that instead of a rate cut, they will not have a raise in interest rates to combat spending and to make sure that the U.S. does not go into a period or a recession or a financial crisis era. And at the beginning of 2026, investors were expecting that there would be 3 rate cuts this year. And some investing groups, such as Citigroup Inc. and Barclay PLC, believe that yields might go above 5.5%. And this has not been seen since 2004. And as well, what makes this similar to the 2007 financial crisis is that the US government realizes that there's a problem. And now they have done a mid May 30-year bond auction, which has not been seen since 2007. And they're realizing that we're becoming closer and closer to this era of financial ruin for the US. And investors did not jump at this opportunity, even though interest rates for these bonds was set at 5%, which is on the high end of the average, which is usually set between 3 and 5%. And the US Treasury expects the deficit to increase, with them expecting that at the end of the year, it will be 1.95 trillion, and by 2027 it will increase to $2 trillion, um, which is honestly insane. And these high yield rates have also started to affect the S&P 500 and other indexes, and they will continue to until something is done, I guess, fixing the situation. And it is expected that once this war over, selling may cool because of the energy prices going back to normal and spending decreasing, but it still won't be for a while until the deficit cools off and it isn't climbing at such a high rate. And on Wednesday, I'm going to get into my next topic because I want to talk about how the S&P 500 was able to recover. Was, as I predicted, and Nvidia's Q1 reports were better than expected, and have and the stock market has given a positive response to these actions, such as Bitcoin, the S&P 500, sorry, and the Nasdaq have all gone up because of this news. And this pushes the hype for AI and the business around it even further than it has been in these past couple of months. And I will say there's a little bit of a caveat when it comes to these earnings reports because Nvidia has now shifted the how they report earnings with now breaking down revenue from data centers and edge computing segments. And from what I'm understanding, um, um, edge computing is, instead of sending raw information, it is computed locally and then sent to the cloud. And with segments, it breaks it down the process from the development to sales of this technology. Um, so they will be able to shift how the revenue is reported from these sectors in NVIDIA, which may or may not, um, which may or may not increase or decrease how much earnings they have, which clearly we can see with these new shifts, they were able to beat out investors' expectations. And I will say what now challenges NVIDIA is now the rise of competitors with new and up and comers such as Cerebras. I may be saying that wrong, which has a new approach to computing. And I'm going to be honest, I won't get into the technicalities of how they're going to change because I simply don't understand, so excuse me. And rival AMD has also made new developments and has unveiled a new rack scale server system that will come out later this year. Amazon and Google have now taken cracks at the AI sector, with Amazon revealing in their earnings reports, and if things continue to be steady, they will generate $20 billion, and year after year, it, I'm, the percentage and the increase will triple thereafter, and that's what they expect. And this is known as run rate. Amazon and Google have now signed in deals to provide gigawatts of capacity. Amazon with 2 gigawatts to OpenAI and 5 gigawatts to Anthropic, and Google will provide gigawatts to Anthropic as well. And this basically means they're using their chips as computing power and using the energy that using their energy to learn from these models. And Google has also revealed new TPU 8i and TPU 8t. TPU 8i is used to run models, and TPU 8t will train models. And like us, the reason that these models need to be trained is that they need to learn and be able to compute data very fast. Now, NVIDIA in the coming months will have its work cut out for itself to stay ahead of the curve and stay ahead of competitors. And if their meeting in China opens more doors for them, they will be ahead of the competitors. But if they can't get access to Chinese markets or improve what they have in Chinese markets to be able to sell to more and more people, a and a rival could take that spot that Nvidia is hunting for. It may lead to the company falling behind and struggling. And as well, I forgot to mention that Nvidia greatly beat out expectations of what earnings were supposed to be. Most investors were expecting a 5 or 4 billion before, lower than what Nvidia's earnings reports were. So um, so they they now have to um, that's why Nvidia in these past couple of days, their stock has risen and was able to bounce back because of what happened. Um, and so that's kind of what's been going on in the stock market. Uh, Kind of going back to talking about Santa Barbara. I personally, I don't know. I like the campus, but it also kind of felt like uh, my community college right now, and I don't know if that's a good or a bad thing because um, I've seen other uh, colleges, um, or at least I've seen other community colleges in California, and I would say it's just a lot bigger than my school. It kind of has some of the same buildings and like technologies, but it's just a lot bigger, and that's kind of crazy to say because uh, Um, Santa Barbara is a mid-tier school, so it's like in between the road. So I can't even imagine what like a larger school would be. And I saw today um, that there are 2,300 people in undergraduate, and it's like a 17-to-1 teacher ratio, and it gets better as you um, get up in higher division, which I kind of found cool. Um, and compared to Santa Monica College, um, there's across the year it's 33, and that's crazy because that's just undergraduate, technically, and people getting their associate's degree at Santa Monica College. And at Santa Barbara, their total student count, including graduate students, is 26, um, which is still crazy because Santa Monica College is a smaller campus. I guess if you, I don't really, I know that Santa Monica College has two other campuses. There's the Bundy campus and there's also the um, Malibu campus. So I don't know how those factor into the size of the school, but um, overall, I found a good experience. I was just tired, and I think I was like when I'm tired, I was like squinting, and I probably looked mad the whole time. And I think the guy who was leading my tour saw that, and then afterwards, I was going back to the visitor center. That's where we met, and they gave us like a lecture and just like told us about Santa Barbara and just gave us some background information. He like got there and he like kind of looked mad at me, but it was still a cool experience. And uh, I I yeah, I don't know. Well, also another thing is like these like past couple of days I've just been really mad, just kind of at my situation right now. But I hope that things are gonna be able to get better, and I'm able to figure out what school I want. Um, Figure out these things in my family. But I want to say thank you guys, and please continue to watch and support.